Good afternoon, Great Hope learners. My name is Mr. Simbi, and welcome to our today's accounting lesson. This lesson is brought to you by the Gauteng Department of Education in collaboration with Saibono Discovery Center. Today is a very exciting day. I know the weather has changed here in Gauteng. We can now feel the cold, but it's very important. It helps us to remain awake when we are studying. Make sure you prepare, as next week indeed we're writing our paper one. So in today's class, I'm going to be doing tangible assets. My objectives for today's lesson are very simple and very straightforward. I'm going to do calculations that pertain to depreciation. I'm going to complete the tangible asset note, that is note number 3. I'm going to calculate depreciation and then get to explain the 1 rand residual value. I'll also explain certain internal control and ethics depending on the type of question that would have been dealing with. And then I'm going to look into problem solving type of questions. So you have to remember what fixed assets are. These are tangible assets, all right? These are assets that have a physical existence, all right? They are acquired by the business, but not intended for resale, but to be used for daily operations of the business. That is in order to generate profit. And you have a couple of examples here. You have your land and buildings, you have your vehicles, and you have your equipment. Remember, you have started to do this some years back. That is when you were introduced to these fixed assets. And as you can see here, these are some pictures that point us to our fixed assets. So this is our land and buildings, but the buildings have to be on land. These are our vehicles, and we have furniture, and here you can also see equipment. Now, the tangible assets, these are assets that must be kept safe in the business, and we need to look after them. And you have to know that the value of tangible assets, such as vehicles and equipment, lose value due to what we call depreciation. All right? Depreciation is as a result of wear and tear that comes from daily use. So once we use our assets daily, they wear and tear. Now, the value of land and buildings appreciates if the property is well maintained. All right. And then the tangible assets will be recorded at cost, irrespective of decline or increase in the market value of assets. And here, for us to know why we need to record it at cost, irrespective of the decline or increase in market value, we rely upon the historical cost principle together with the prudence principle. So you have already done this in grade 10. This was well explained. Then we come to what we call the asset register. You remember this, the asset register. This is a register where we record all assets that are bought. So every single asset that we buy, we register it in the asset register. So this is the list of assets that belong to the entity, to us as a company. So this list records all the assets that belong to us. And now we want to talk about the purpose of this asset register. What is the purpose of this asset register? Now, it keeps track of the book value of assets. The asset register keeps track of the book value of assets, and then it determines the depreciation to be calculated and recorded for management and taxation purposes. So in the asset register, we get to see the depreciation that has been calculated as well as the book value of the assets. Now, here is the information that you can find on the asset register. That is the date of purchase when we bought the asset, the cost price, what did we pay for the asset, then whom did we buy it from, that is the details of the seller, the type of model, all right, that is what type of a vehicle or an asset is it. So you need to record the type together with the model, and the serial number and all of this other information needs to be recorded on the asset register. As you can see here, here is a sample of an asset register where you can see the cost price over here and then the method of depreciation together with the rate that will be applied. You already know by now that there are two methods that we use when we are calculating depreciation. Two methods, namely your straight line or your fixed installment, or the cost price method, whereby you get a percentage of the cost. This is Method number one. With method number two, it is called the diminishing balance method, not diminishing balance method. Now, with the diminishing balance method, we calculate our depreciation on the carrying value. So you must be able to calculate the carrying value in order to do that. But in accounting, it is always exciting if we can do this with figures. We need to see figures. And I know some of you are saying, Mr. Zimbi, enough of chit chat. Show us some figures. So let us do so. I'm going to give you some figures. So today I'm going to start off from the NSC November 2020, and my focus is on question number 4. Now, it is a daily song. Whenever I come here, I sing this song that talk to your teacher. Your teacher must have the particular worksheet for the day because these worksheets are distributed early in the morning. Like early Friday morning, your teacher must be having the worksheet. And then they must print out these worksheets for you. Ask them nicely, sir, ma'am, please remember to print the worksheet for the live class. That makes it easy when we come here that you get to follow through with the calculations. If you don't have it, you can still watch. And remember, you must have somewhere to write. We need a calculator. You also need pen as well. Okay, let us begin then. Our activity 1, what you can see here is a note 3. On activity 1 is a note 3, and then we have additional information that speaks to land and buildings. The next one is about vehicles. And then lastly, we have information on equipment. Let's deal with them one at a time. So we begin with our land and buildings. So remember, this is an extract of note number 3, all right? That is the fixed asset note. And as you can see here, we have our land and buildings. Now, you have the cost at the beginning, and then you have another cost here, which is at the end. Very key. So these amounts here are at the beginning, and these amounts here are at the end. And this is the movements section. Now, if you take your cost at the beginning, you add your additions, you will get your cost at the end. But here we are required to calculate the cost at the beginning. So that is the issue now, the cost at the beginning. It is very simple for you to do this, all right? Because these are land and buildings. They do not have accumulated depreciation. So that means the disposal that we see here will be at cost. Why? Because with the land and buildings, they do not depreciate. So there is no depreciation that is recorded here. So it is very simple that when I go up, I subtract. But when I go down, I add. So I'll simply say now, here, what am I required to calculate? All right, a building on a separate property was sold at cost. Now we want to see what is the cost of that building. Very simple. I'll simply say my 9,650,000, which is this one. Okay, the one at the end, because I'm going up, then I'm gonna say minus. So if I say minus minus, because you can see it's a minus, minus minus becomes plus. But I know some of you in the classroom, you don't deal with the minus minus. You simply say when you go up, you swap the sign. That is, you change the sign. When you go up, you change the sign. So instead of subtracting the 850, we come then we add the 850. So it becomes 9,650,000 plus the 850,000. So we add that one there. Then here's our adding machine, 9,650,000. Then we say plus 850,000, like that. And that is going to give me 10,500,000. So it gives me 10.5 million, like that. That becomes the answer to number 1. We simply changed the sign and we went up. Let's go to number 2. Are you ready? Let's do so. Number 2. It says, a new vehicle was bought on 1 January 2020. vehicles are depreciated at 20% per annum on cost. Very key that whenever you calculate depreciation, you calculate for your sold, your old, and the new. That is your son. So in this case, we don't have the sold. However, we do have the old. Let's start with the old then. Okay, which one is our old? The old is the one that is there at the beginning. And our depreciation is 20% per annum on cost. So we'll come here and then we'll now say our 1,281,000, 1,281,000. Then we multiply that by 20 over 100. Then we multiply that by 12 over 12. Why? Because this is the old. The old is always the 12 over 12. It is only the sold and the new that we have to calculate and count how many months we have had it. But the old will always be 12 over 12. Let's see. So I'm going to say 1,281,000. 1,281,000 multiplied by 20%. That's going to give me 256,200. 256,200. 256,200. That becomes the depreciation for the old. That becomes the depreciation for the old. Let's come to the new. Let's come to the new. The new is the addition. The new is the addition. So here we're calculating depreciation on cost. So the addition is my new. So I'm going to come here and I'm going to say 625,000 multiply by my depreciation rate is 20%. We know that. Now we need to know how many months we have had it. A new vehicle was bought on the 1st of January. All right. And the financial year ends on the 31st of March. So we're going to count, we are having it from January. That's when it came in. That's when we bought it, 1st of January. So we'll count January, February, and then March. That's going to give us 3 over 12 months. Let's see how much that is going to give us. So it will be 625,000. Then we multiply by 20%. Then we divide by 12. Then we multiply by 3. That's going to give me 31,250. That's 31,250, like that. So we add these two amounts. We add those two amounts. How much are they going to give us? That becomes my depreciation for number 2. I need you to have your calculators close so that we can do this together. Let's see. That 250 plus 256, 200. 256, 200. 256, 200. That is going to give me 287,450. So it's going to give me 287,450. That becomes my answer for number 2. This one was not so very difficult. I think you were able to crack this one. So you have to remember that when you calculate your depreciation, you must do your SUN, which stands for the sold. We do not have the sold here. We have the old, which we had, the one that is always there at the beginning. And then we have the new. This is the new. Your new is the addition. That's the new. The addition is the new. The addition is the new. We good? Okay, cool. Okay, we can go on then. We can go on. I hear someone saying, Mr. Simbi, we can go. Let's go on now to the third piece. The third piece is equipment. Equipment. Can I go? Beautiful. Let's go. It says, old equipment cost 21,000, was sold on 30 September. So now we have disposal now, which is number 3 here. So the disposal has to do now with the asset that was sold, as in this particular case. The accumulated depreciation. So this asset had already lost 15,000 due to depreciation as of the 1st of April 2019. This is at the beginning of the year. At the beginning of the year. Equipment is depreciated at 15% per annum on the diminishing balance method. I want to show you something. Can I do so? Make sure you have your pen and you're ready to write. Can I do so? Okay, let's do that. When we are here, you have to know, very important, that cost minus accumulated depreciation is equal to the carrying value. That goes without saying. Cost minus accumulated gives you carrying value. You ready? Let's go see. So my cost here is 21,000. I can simply bring my 21,000 there. There. Simple. Easy. No hassles. Minus my accumulated depreciation. I take the accumulated at the beginning of the year, which is 15,000. Like that. That is going to give me my carrying value, which is how much? 6,000. We still together? Beautiful. Now, I also know that if I say carrying value at the beginning minus depreciation must give me carrying value at the end. Did you get this one? Okay, so the carrying value at the beginning of the year, if I take out depreciation for the year, it must give me the carrying value at the end of the year. It's very simple. Very simple. Don't even complicate it. So I now know that I have my carrying value here. My carrying value at the beginning is 6,000. So I bring my 6,000 here. Because here they want me to calculate disposal, but at carrying value. What was the value of the asset on the day we sold it? What was the value of the asset on the day we are disposing it? That's what they're asking. So I'll say my carrying value at the beginning, 6,000, minus my depreciation. So I need depreciation for the year now. I need depreciation for the year. How do I get that? We are using the diminishing balance method, not diminishing. So I'm going to come in, I'm going to say diminishing balance means I must use my carrying value. So I'm going to come in and I'm going to say my 6,000, which is my carrying value, multiply by the rate, which is 15%, multiply by the number of months. Okay, so if we are disposing it, I need to count from the beginning of the year. So I'm going to count from April, May, June, July, August, September. Do I go forward? No, because it was sold on 30 September. Someone is saying, Mr. Simbi, please do it again. Make sure you have your fingers out. Can I see your fingers? There you go. So let's start counting. We count from the beginning. Beginning is April. So we count April, May, June, July, August, September. That is 6 over 12. 6 over 12. Let's see if we can get an adding machine. All right. Where are you, my good friend? There you are. So we will now say 6,000 multiplied by 15%. That is it. And then I divide it by 12. I multiply by 6. And then I get my 450. So my depreciation is 450 here, like that. So if I take my carrying value at the beginning, 6,000, I subtract the depreciation of 450, I should get my carrying value at the end. So I would then say my 6,000, there you are, minus how much? 450. Is it 450? Yes, it's 450. How much do I then get? 5,550. So I come here, I get 5,550. That becomes the carrying value of the asset that we disposed. 5,550. I showed you a very simple way. Where do we start? Cost minus accumulated is equal to carrying value. Then you bring your carrying value here. You take the same carrying value, you use it to calculate depreciation for the year. Because in the year we are disposing it, we still used it. So it lost value to depreciation. So if it lost value to depreciation, we must still come. Then we say our carrying value at the beginning minus depreciation. Then we get the carrying value on the date of disposal. That becomes the answer for number 3. Okay, we good? All right, I hear people saying, Mr. Simbi, we can move on. Let's do so. Let's do so. Activity number 2. Activity number 2. Here we go. Okay, can I see those that say, Mr. Simbi, we can go? Okay, we can go then. We can go. Activity number 2. Activity number 2. Let's see what it says. Okay, so activity number 2 is adapted from the June NSC exam for the year 2022, Yantis Limited. The information relates to the financial year ended 28 February for the year 2022. Required. Refer to information A. Calculate the missing figures indicated 1, 2, 3. So this must be something that we can do because we've just done one now. Okay, so let's see if we can do this one. And here's the information. Calculate the missing figures indicated number 1. So you can see here in our buildings this time there is no missing information, but the missing information is on our vehicles. In our vehicles. So what do they want us to calculate? Carrying value. Ooh, you remember what we did just a second ago? How did we get carrying value? We said cost minus cost here minus accumulated depreciation. It gave us carrying value. So it means if I say my 2,350,000 minus 840,000, that is going to give me. So I'm going to say 2,350,000 minus 840,000. All right, that is going to give me 1,510,000. That gives me 1,510,000. 1,510,000. That is number 1 here. That is number 1. 1,510,000. 1,510,000. Okay, can I go on? We now want to calculate number 2. Let's do so. Number 2. You can see that number 1, here we go. Number 1 was on the vehicles, but number 2 is on the equipment. So let's go to the equipment. Then we come back again to the vehicles. Deal? Let's do so. Let's go to the equipment. It says, calculate the missing figures indicated by 2. Additional equipment was purchased on 1 October 2021. So we have additions. That's my new. Equipment is depreciated at 10% on cost. So once I come here, I now know that if I'm to get my depreciation here for the year, I must calculate for the sold, old, new. Son, I spoke about this. Now, the question is, do we have sold here? No, we don't have sold. Do we have old? Yes, we have old. So we start with the old. Let's go to the old. Here is my old here. The old is the one that is at the beginning. Then it reads, the cost is 640. The accumulated depreciation is 612,000. If you've been following my lessons, already you can see that there is something that says, be careful. There's a flashlight, all right? There is, the traffic light has now turned amber. It's now saying, be careful, all right? Because you can see here that the difference between my cost and my accumulated depreciation is so small, very little, only 28,000. Okay, then we are required to calculate depreciation on cost price. Once I hear that, I open my eyes even wider. Why? Because when an examiner is to test me on the 1 rand residual value, number 1, they must use the cost price method. That's key number 1. Number 2, the difference between the cost and the accumulated must be very little. Okay, but let's calculate and see. So I'll take my 640,000, that is this one, 640. Then I'll say multiply that by 10%, 10 over 100, and the old is always 12 over 12, and that is going to give me 64,000. is this amount correct? Someone is saying, Mr. Simi, no, it can't be right. And why can it not be right? Because our carrying value is 28,000. So our depreciation cannot be higher than our carrying value. You can lose more than what you have. So you can't lose 64 when the carrying value is 28. So that simply means we lose this amount now. Then the 1 rand residual value principle kicks in. And if you have been following my lessons again, it's very easy to get the depreciation. What do? You remember what I taught you, that carrying value minus depreciation is equal to carrying value. We say this yesterday. So it's carrying value at the beginning minus depreciation gives you carrying value at the end. We're still together. So my carrying value at the beginning is 28,000 minus my depreciation. I must remain with 1 rand of carrying value, the residual value. I must remain with 1 rand. So in other words, the difference between my carrying value at the beginning and my carrying value at the end is my depreciation. So if I say 28,000 minus 1 rand gives me my depreciation, which therefore becomes 27,999. Or someone is saying, punch it in. Let's do that. 28,000 minus 1 rand is equal to 27,999. That becomes my depreciation. So that becomes my depreciation for the old. So I now have my depreciation for the old is 27,999. The trick here was the 1 rand residual value. How did I know? I looked at the difference between my cost and my accumulated solely two. That means I might be tested. Number 2, I looked at the method of depreciation, which is on cost. Once it's on cost, it simply means I am more likely to be tested on the 1 rand residual value. So here it is. My depreciation therefore becomes 27,999. Let's come to the next one. What is the next one? New, additions. Additions is the new. So we come to the new. On the new, what is the cost price of the new? 195,000. And what is the rate of depreciation? 10 over, is it 10? Yeah, there it is 10. Someone was saying 15. No, it is 10. There is 10. 10 over 100 times how many months? Okay, additional equipment was purchased on 1 October. 1 October. So it arrived in the business on the 1st of October. So we count now October, November, December, January, February. How many months is that? That is 5 months. 5 over 12. Let's see if we can get the figure. So it's going to be 195,000 times 10%. Divide by 12 times 5. That gives you 8,125. So that gives me 8,125. What is that? That is my depreciation for the what? For the new asset. So when I come here, I have my old 2799. I'm going to add my new, which is 8125. Can I see those adding machines one more time? Here you are, my good friend. 8125 plus 27,999. That's going to give me 36,124. So my answer here becomes 36,124. And it must always be in bracket. It needs to be in bracket. That was number 2. We need to go back now to the vehicles to do number 3. Let's go to number 3. Number 3. Here's number 3. Number 3, we are required to calculate the disposal. But I have taught you at this point, Once you hear the word disposal, you must think it is always disposal at carrying value. We want to know the carrying value of the asset that we are disposing, writing off from our books. So, how do we do that? We are told an old vehicle was sold at carrying value on 30 November. The cost price of this vehicle was 252. So I have my cost here. Cost 252,000. Am I too fast? I'm good. Okay, beautiful. Cost, then I say minus. Accumulated depreciation was 172 minus accumulated depreciation, which is 172,000. It will give me what I call carrying value. Let's see. Come here, my good friend. 252,000 minus 172,000. That's going to give me 80,000. So my carrying value is 80,000, like that. Carrying value at the beginning. Vehicles are depreciated at 20% on the carrying value. What did I teach you? The second thing, that carrying value at the beginning minus depreciation for the year is equal to carrying value at the end. We good? Aha, aha. You want me to say it again? Okay, I'll say it again. No problem. Your carrying value at the beginning of the year minus your depreciation will give you a carrying value at the end of the year. So, how much is your carrying value at the beginning of the year? 80,000. Now you must come and subtract what? Depreciation. Do we have that one? So we need to calculate it. How do we calculate it? We are told here it's on the carrying value. So it means I'm going to take my 80,000, multiply by 20 over 100, multiply by, this is being disposed. Do I count from the beginning to the end, or from the beginning to the day of disposal? From the beginning to the day of disposal. When is it beginning? March. So I'm going to say March, April, May, June, July, August, September, October, November. How many months do you see there? 9. So I'll come here, then I say 9 over 12. Let's your adding machine. There you are, my friend. 80,000 times 20%. Divide by 12 times 9. That will give you 12,000. So I come here, I get my 12,000. What is that? That is depreciation for this year. For the 9 months that we used the asset, it lost value. So if it lost value, we must account for that. So we say it had a carrying value at the beginning of the year. It was worth 80, but we used it and it lost 12,000 due to depreciation. So at the end of the year, what is its carrying value now? 80 minus 12, that's going to give you 68,000. You want me to punch it in the calculator? Ah, come on. This one is a simple figure. You can get the 68. You can get this one, isn't it? Beautiful, beautiful. So here, my answer, therefore, to number 3 becomes 68,000. Disposal must be in brackets. Okay. You want to look at it? Okay. I'll give you a second just to have a look at it, and then we move on. Can I go? Okay, let's do so. Let's do so. We're coming now to activity number 3. Okay, so what we're going to do, we're going to take a 2-minute break, just a breather, so you can inhale whatever I have explained so far. 2 minutes, just a breather, and then I see you in 2 minutes. Welcome back. We just took a very short break, 2 minutes exactly, and we just wanted to allow you guys to get more stationery, somewhere where you can write, sharpen your pencil so that we can do the next calculation. This is coming from the NSC November for the year 2023. Very interesting calculations we're going to do here. It says the information relates to the fixed tangible assets of Tembeka Pty Ltd. The CEO is Lee Clow. The financial year ended on 28 February. Very key information. The year ends on 28 February. That is in the year 2023. Calculate the following. The cost price of the vehicles. So you're going to calculate, number one, the cost price of the vehicles. Number two, the trade-in value received on the disposal. And then we're going to do all these calculations. Why read all of it when we can do it one at a time? Let's do so. One at a time. Here's more information. Here's more information. Okay. Okay. And then that's the last part there. Okay. And then after this, then we can start now with the first one. What is the first question saying? Calculate the following. The cost price of the vehicles on the 1st of March. So you can see the first two activities were somehow similar. And now I'm venturing into something different. I want to believe if you can give time to this lesson, you really listen, you really practice together with me on this content, there should be angles that should be covered before you can write your June exam. Okay, so here we're going to calculate the cost price of the vehicles on the 1st of March. Now, what I want to do, let me see if I can go back into what you did in grade 11. In grade 11. So I'm going to open a T account here. Okay. I can draw straight lines. So we're going to call this our vehicles account. Let's go. Vehicles account. Because here it wants me to calculate the cost. So I know this is my vehicles account. This is a cost account. This is at cost. All right. So on your debit side, that is a plus. On the credit side, it's a minus because this is an asset. Okay. So my balance brought down, the balance at the beginning. That's what we are looking for actually. All right. I know that here I'm going to bring my additions. So here, let me just say additions here. I'm going to call them additions. Here, I know in grade 11, you'd either say bank or creditors control. That is, you bought it cash or you bought it on credit. And then, so here we're told a vehicle was traded in on 1 June, costing 260. The extract of the fixed asset register reflects the following. Okay. And then the asset and then the date purchased. So this is more information. Okay, so a vehicle was traded in for a new one on 1 June. So the new one is costing 260. The new one is costing 260. Let's read this English again. Very tricky English here. A vehicle was traded in for a new one on 1 June 2022, costing 260. So the new one is costing 260. So the additions here is 260. It's the new one costing 260. And then let's come like that. All right. All right, let me extend the line like this. Then it says the vehicles at the end in 2023, it is now 930,000. That means it is my balance brought down 930. And here it is my balance carried down 930. Okay. And then the vehicle that was traded in, this is the one that we're trading in now. The vehicle that was traded in has a cost price of 180. So I'll come here. Here's my disposal. 180,000. So simply close off the ledger account. How do you close off a ledger account? The side with the highest amount. You're going to add your credit side where you have your 180,000. That's 1.8 CB. 180,000, correct now. Plus 930,000. That is equal to 1,110,000. 1,110,000. 1,110,000. Then you subtract 260 minus 260. And that is equal now to 850,000. 850,000, which is this one here now. 850,000. That 850,000 therefore becomes the cost that we had here at the beginning. 850,000 there at the beginning. The cost price on 1 March was 850,000. Okay, so that is the simplest way to explain this. But if you want a shortcut way, you can simply take your cost at the end, which is your 930, and then you say minus the new one, The new one is what? 260 minus the new one, which is 260, and then add back the one that was disposed. The one that disposed is 180, and then it will give you straight your 850. The idea is to remember to subtract the new and add back the disposed, because you're starting with a balance at the end over there. So you need to remember that trick as well. Okay, let's move on to the next question here. It says, calculate the following: the trade-in value received on the vehicle disposed on the 1st of June. What was the trade-in value that we received? Okay, so again, let me see if I can remind you of what you did in grade 11. In grade 11, you did what was known as an asset disposal. So in the asset disposal, you'd record the asset that you disposed. The cost price is 180. So you'd come here, then you say vehicle 180,000. And here you would get your accumulated depreciation. And the accumulated depreciation on this vehicle at the beginning of the year, which is February 2022, it was 64,800, which is what we have over here. This is the accumulated depreciation at the beginning. We are told depreciation is on the diminishing balance method. By now, you know what I'm going to do. I'm going to simply say my cost, which is 180,000, minus my accumulated depreciation, which is 64,800. It should give me my carrying value. Okay, let's see how much that is going to be. So if I take my cost, which is 180,000, I subtract my accumulated, which is 64.8, it should give me 115,200. So I'll come here, it becomes 115,200. That is my carrying value at the beginning. If I take my carrying value, I multiply it by the depreciation rate of 20%, 20 over 100. Now you multiply. How many months did we have it this year? Remember, the year ends in February. That means it begins in March. So from the 1st of March to the 1st of June, there is a trick there. 1st of June. Do you count June? So you're going to say March, April, May. Do we bring June? No, because it is the 1st of June. When it is the 1st of June, we don't consider June. So we remain with 3 months times 3 over 12. Like that. And then let's see if we can get our adding machine back. So it's going to be 150,200 multiply by 20%. Divide by 12 times 3. That's going to give me 5,760. So that becomes my depreciation for the year. 5,760. Remember, the asset that is being disposed, if it is used in the year of disposal, you must still calculate its depreciation. Okay, let's go back. So you come here, then you say plus 5,760. You close the bracket now. And then you now say 5,760 plus 64,800. And that's going to give me 70,560. So I come here, I'm going to get 70,560. That is my accumulated depreciation. Okay, that is the accumulated depreciation on the date of disposal. Now, we are then told that we realized profit on the disposal of this vehicle, which is 5560. So if I have profit, I'm going to bring it here now, which is 5560. What we want to get is this one here. This one here. So to do that, we simply close off our ledger account. We close off our ledger account. 180,000 plus 5,560. That gives me 185,560. 185,560. And then now this is going to be the trade in value. I'm just going to write trade in value here. This is the trade in value here. Okay, so I will now say 185, 185, 560, 560 minus 70,560. That is going to give me 115,000. So the trade in value becomes 115,000. Grade 11 became very helpful here. So that is your trade in value of 115,200. Okay, 115,000 rather. 115,000. Okay. Now, we can quickly move on to the next one. Let's move on to the next one. Let's move on to the next one. Okay. There are shorter ways in which you could have done this very same one, but the T account would have made life very easy. Remember, here, we just want to make life easy for everyone, that you can be able to answer questions comfortably so. So the idea is to make it very, very easy. Okay, very, very easy. Let's go on to the next one. The next one then reads, the bookkeeper calculated the depreciation for computers. Where is our computers? Here's our computers. Our computers were 300 at the beginning. There's still 300 at the end. So we did not buy a new, we did not sell. Then the bookkeeper said 300 times 25 over 100 got 75,000. The question then comes and says, explain to him why his method is incorrect. This method here. Why is it incorrect? And provide a calculation to support your answer or your explanation. Here, if you come and check, you see that the cost of this asset is 300,000. And the accumulated depreciation is 275,000. Therefore, the carrying value is 25,000. The carrying value over here. So if the carrying value is 25,000 and the depreciation is to become 75,000, that is impossible. It cannot be. Our assets cannot depreciate more than their carrying value. So it simply means in this case, we need to apply the 1 rand residual value principle. So in explaining this, we say, the bookkeeper has not realized that the asset is almost fully depreciated. The 75,000 cannot be correct, as it would lead to a negative carrying value. What does that mean? It means if my cost is brought here, remember it remains 300,000. But my accumulated depreciation is going to change because at the beginning it was 275. And then this year, according to the depreciation that the bookkeeper got, it's 75,000. So if we say 275 plus 75, if we say 275,000 plus 75,000, that will give me 350,000. So I would have to say 350,000 here. So 300 minus 350, that would give me a negative 50,000. That's what this point is saying. The 75,000 cannot be correct, as this would lead to a negative carrying value. And an asset cannot have a negative carrying value. And we then close up by saying, a fully depreciated asset must retain the 1 rand book value for disclosure purposes. Okay, can I move on? This was a different way of testing the same principle, the 1 rand residual value principle. 4.3.3. The CEO, Liklo, wants to improve the company's image by donating the old computers to a local school in March 2023. He also plans to upgrade the software of these computers at an extra cost of 20,000. The shareholders feel that the old computers should be sold at a profit. Okay, now we now need to explain two possible points that the CEO can use to support his decision. Remember, the CEO wants to donate these computers. The donation to a school in the community is part of the company's compliance to corporate social responsibility. It's very key, especially when you prepare for paper one. You cannot go to an exam venue without knowing your corporate social responsibility. You need to know why companies need to engage in corporate social responsibility. Here we're talking triple bottom line. This is the King Code. Okay. And then this will promote the good image of the company. It brings the company into good repute with the public. Okay, good publicity. It attracts more customers. It will definitely attract more customers. Giving back to the community that supports the business. That's a good thing. The same community that comes to support us as a company, we need to give back to that community again. And remember, if we donate, it is tax deductible donation. And the assets may be close to residual value, that is, they're about to be fully depreciated. Therefore, they are no longer productive to the company. And you will see that they might be too costly to maintain as well. And they might be not compatible with the new programs of the company. So it is wise that we donate them. Okay, we still have a little bit more of activities to go through, and let's go to activity 4. Here's activity 4. Activity 4 is from the May-June 2023. Activity 4 from the May-June 2023. Okay. Once again, before I start this, I would want to ask you, make sure you have somewhere to write. Make sure you have pen, paper, so that we can begin our activity 4. Let's begin. Starlight Limited. The information relates to the financial year ended 28 February 2023. The company trades in electrical items required. Refer to information B and calculate the profit or loss on disposal of the vehicle and the total depreciation for the year. Okay, let's see if we can do this one. What do you want us to do? Calculate the profit or loss on disposal of the vehicle. I think I did it 1,000 million times today so far. How do you calculate the profit or the loss on disposal of the vehicle? Let's see. Vehicles. An old vehicle was sold for 91,500 on the 30th of November 2022. The amount received was recorded, but no further entries were made. Details of the vehicle sold. The carrying value, 1 March, is the beginning. And depreciation is that. So, what do they want? They want us to give them either the profit or the loss on the disposal of this vehicle. Let's see if we can do that. What did I teach you so far today about carrying value? You understand that your carrying value at the beginning, if you come and then you subtract your depreciation, it should give you your carrying value at the end. Simple. Simple. So, do I have carrying value at the beginning? Yes. How much is that? 104,000. Here, 104,000. Carrying book value at the beginning minus depreciation. We don't have it. Not a train smash. We can calculate that one. How do we get that one? We simply say our carrying value. How much is that carrying value? The carrying value is 104,000. Okay, where is that? Here you are. So we take that 104,000 and then we multiply that by 20 over 100. Then we say, for how many months did we have it? It was sold on 30 November. The financial year ends in February. That means it begins in March. So we're going to say March, April, May, June, July, August, September, October, November. How many months are we talking about? 9 months times 9 over 12. Come here, my good friend. So we say 104,000 multiply by 20 divide by 12 multiply by 9. That will give me 15,600. That 15.6 is the depreciation for this asset in the year of disposal. So I'll come here, then I'll say minus 15.6. Then I'll go and say, let's now say 104,000 minus 15.6. It will give me my carrying value on the date of disposal, which is 88.4. This is the carrying value, the worth of the asset on the day we sold it. On the day we sold this asset, it had a worth of 88.4. That was its carrying value, its book value. Now, we are told that a vehicle was sold for 91.5. We sold it for 91.5. Yet it was worth 88.4. I taught you trick number 1. Can I bring trick number 2? Trick number 2. Let's bring trick number 2. Trick number 2 then reads, my selling price, which is 91.5, minus my carrying value, which is 88.4, will give me either profit or loss. If the calculator gives me a positive, it is profit. But if the calculator gives me a negative, therefore it is a loss. So I rely on the calculator. Let's see if our calculator will tell us the truth. So everything is gone now. Okay, so we say 91.5. Okay, selling price minus the carrying value of 88.4. That's going to give me, is that a negative or a positive? It's a positive, of course, 3.1. So it's going to give me a positive 3,100. If it is positive, it is. So we realized a profit of 3,100. So we know, and you must state that because the question says, calculate. We've calculated 3.1, but you don't end there. You must tell the examiner, I know what I'm doing. I attended Mr. Simbi's class and I was told if it's a profit, I must indicate that it is a profit. And if it is a loss, tell them it's a loss. Okay, in this case, it was a profit. Why? Because the calculator gave us a positive figure. If it was negative, loss on disposal. Can I go to the last part of this activity? Okay, let's do so then. Let's do so. That is, calculate the total depreciation. Calculate the total depreciation. Calculate the total depreciation. Okay, so if we're to calculate the total depreciation, there is some amounts that we're given. So if we would come, we would now say on our vehicles, remember on our vehicles, you must have the sold. The sold, we did calculate it. Depreciation on the sold is 15.6. 15.6. So let's go. Depreciation on the sold is 15.6. Then we say, remember the son, sold, owed. And they say that depreciation on the remaining vehicles is 145.2. So I come here as a plus 145.2. Okay. Then it will now be 15.6 plus 145.2. It will give me 160,800. 160,800. This is just on vehicles. What do we still need? Equipment. We still need equipment. We've done vehicles. Now we need to do equipment. Now we're told equipment is depreciated at 15% per annum on cost. On cost. All right. So whenever they say cost, I must always think, are they testing me? 100 residual value, 100. Then I come and check. How much is my cost? Here is my cost. How much is my cost? 774. How much is my accumulated 360? Is it a small difference? No. Save. Okay, but I still need to keep my eyes open. So where do I go now? I'll come, then I'll say, if it changes, that means something happened. Oh, they told me new equipment was bought. So that's the reason why it was 774. Now it's 822 because there is new equipment that was added onto the 774 to arrive at 822. You following? Okay, so that means my old is 774. 774. Multiply that. What is the depreciation rate? It is 15%. And the old is always there. The old is always there. 12 over 12. Okay, let's quickly see. And then if we come here, it's going to be 774,000 multiplied by 15%. That's going to give me 116,100. 116,100. That is for the old. And then there's a new one. Remember the reason why there's a difference. Then we come to the new. How do we get the new? 774, the difference between it with 822. So we're going to say 822,000 minus 774,000. That's going to give me 48,000. So the new is 48,000. The new one has a cost price of 48. Then we say 48 multiplied the depreciation rate. I know it's 15%. Then when was it bought? 31st of July. So do I count July? No, I start August. So I'm going to say August, September, October, November, December, January, February. The year ends. How many months am I dealing with? 7 over 12. Okay, and then I come here and then I'm going to say it is 48,000. You multiply that by 15%. You divide by 12. You multiply by 7. That's going to give me 4,200. So I come here, I get my 4,200. So if I add these two, they'll give me depreciation now for my equipment. How much is that going to give us? So it is going to be 4.2 plus 116,100. And that is going to give me 120,300. So here I get 120,300. Then I add this to 160,800 plus 120,300. Then that will give me total depreciation. Let's put that in the adding machine. 120.3 plus 160,800. That is going to give me 281,100. 281,100, like that. Okay, my good learners, we're going to take exactly 2 minutes just to breathe, and then we come back and then we do activity number 5, which is adapted from the Gauteng prelim for the year 2022. 2 minutes, and I see you after 2 minutes. And welcome back. Before the ad break, I think we've done about 4 activities. Very interesting, all from NSC papers. And we're calculating various depreciation amounts. Some of them were very tricky, but you know what? We were able to maneuver around, and I managed to show you a couple of tricks. We started off with note number 3, and then we went on to some more interesting calculations. And what I have here is the Gauteng prelim paper for the year 2022. Yeah, this is our own paper. So let's see what we tested in the year 2022 in the prelim. Okay, so here is our problem solving uh, question. Whenever we are talking about problem solving, you need to look at some of the common challenges. It can be that the asset is very old, so we look at the date of purchase, or the asset now has a low carrying value. Remember the 1 rand residual value, so it becomes very expensive to maintain. Or it could be that the asset is not insured, or assets need to be insured. And then it could be the number of days worked by the driver. It could be that the number of days are very little, so the asset is not being fully utilized. High fuel consumption. The idea of the company is to maximize on profits. So if there is high fuel consumption, then it is a major concern. High maintenance. If we are paying so much to maintain it, rather dispose it and get a newer model that is less to maintain. Kilometers traveled. If the kilometers traveled are exceeding what is expected, then we should have a problem in that case as well. And insurance comes back again and say, please, Simbi, speak about me again. Insurance again. You need to have insurance. And the number of deliveries made. There is a number of deliveries that can be given to drivers. So we need to ensure that happens. But these are mainly pertaining to vehicles. But you can have different assets that you can have problems with. It can be your learning buildings where you can be given problem solving, or it can be machinery that keeps breaking down. So you need to go into the exam with an open mind that the examiner can bring anything, and I should be able to adjust and be able to answer tricky questions as well. So the question reads, problem solving on fixed assets. The following information was extracted from the records of JB Suppliers. The company has 3 identical delivery vehicles. These vehicles are being used for delivering merchandise to customers. 3 identical, very, very key. 3 identical vehicles. Company policy states that deliveries will be free of charge to customers within a radius of 10 kilometers to the premises. Identify and explain 3 possible major problems with figures relating to the control of fixed assets. In each case, provide advice to improve control over these assets. Let's see the information. Here's the 3 identical vehicles. Vehicle A, vehicle B, and lastly, vehicle C. Okay, so let's go. Let's deal with vehicle 1 individually. Vehicle A. Identify and explain 3 major problems. 3 major problems. 3 major problems. So you can see here, let's see. It says the cost price is that one, and it was purchased on the 1st of March 2021. So it's pretty new. And then the carrying value is 337,500. Distance traveled is 23,400 kilometers. And then number of deliveries made, 520 per year. Fuel consumption, there is the amount. Service and maintenance cost, okay. And then number of days driver worked to 83. Then the salary of the driver, there it is. So we want to look at the problem with this vehicle. You can see that this vehicle has traveled about 23,400 kilometers. But in those 23,400 kilometers, it was just for 520 deliveries. So that brings us to the first problem, that more kilometers are traveled, but fewer deliveries are made, especially if you compare with other vehicles. You can see that the other vehicles have only traveled 18,000 and the other one 17,000, but their deliveries are 1,050, 1,100. But if you come here, you will then see that this vehicle has traveled less, I traveled more kilometers, but did less deliveries. It could be unauthorized use of the vehicle. That could be the issue here. So that is 23,400 kilometers as compared to the other ones, you remember, and the deliveries are less than the other ones that are made in the other vehicles. What can we do now? Because remember, the question says identify a problem and then give internal control, provide internal control measures. Okay, number 1, improve internal control over the use of vehicles. All right. So you can do that by having a logbook system or putting vehicle tracking devices on the vehicle. And you can also call the driver for a disciplinary action. All right. Because he has to explain how is it that his kilometers are far higher than the other drivers, yet his deliveries are way lower. And then you need to compare the logbook with Google Maps to avoid unauthorized private traveling. So we are in the days of technology where you can track easily where the vehicle is. There's a lot of apps that can be used to track where your vehicle is. So we mustn't limit ourselves onto old systems. So you can also bring such answers in your exam that the vehicles must be tracked and they can also be checked on the tracking system that the company has to check where they were traveling. And with the current apps, I think you can be able to check the kilometers traveled as well on that particular app. Okay, so let's go on to vehicle B. Vehicle B. It says identify and explain three major problems. So with the vehicle B, when we come here, you will see that here's number of days the driver worked is 239. And if I take you back with the other guys, you can see they've worked 283 and 291. So he has worked less days here, 239 days. Okay, let's come here now. So we're going to say fewer days were worked, but the driver received the same salary as the other drivers. All right, that's a big issue because he only worked 239 days as compared to the other guys who worked 291 and 283 days. And yet they are receiving the same salary, okay, which is 252,000. Yet he's working less days. All right, what should we do? We should investigate the reasons for his absence. It's most likely this guy is always absent, yet his day, that is the reason why his days are lower. So we should investigate the reasons for his absence and only pay workers for the days that they have worked. No work, no pay. Okay, I take that back. Only pay workers for the days worked. Do not pay a fixed salary, but pay commission for the days worked. Okay, that would be a good solution in this case. Okay, and then let's come now to the last vehicle, which is vehicle C. Now with vehicle C, it's quite easy, all right, because you can see here with vehicle C that the carrying value is 1 rand. That means it has now reached the end of its useful life. And you can see its fuel consumption and the service and maintenance cost. They are quite high. So this vehicle has high petrol consumption because it is now old. It is also costing us in terms of maintenance because of its age. The vehicle with the lowest carrying value, including 1 rand residual value, is normally expensive to maintain. So once it has reached the end of its useful life, it is rather safe that we donate it or we dispose of the vehicle. Okay, and then here is consider replacing this vehicle as it is expensive to maintain. Consider using vehicle A for delivery since it is new. That is cost effective and it is being misused. So you can take the driver of this vehicle and then give him vehicle A. That is the next solution. Replace the driver of vehicle A with the driver of vehicle C, since the latter made the most deliveries of the three, worked most days. He has worked most days, yet his vehicle is more expensive. So the guy is hardworking. So give him a more efficient vehicle and then he can make more deliveries. That could be a good solution. Okay, we're going to come now to the very last activity, the last activity for the day. That is activity number 6. Activity number 6. Activity number 6. This is extracted from a very, very fresh paper, NSE November 2024. This is the paper that was written in the previous year. So I have a couple of calculations. I think if you look here, I have about 4 calculations to make. We have about 3 minutes 13 minutes rather left of the lesson. So let's see if we can push this. Are you ready? So you need to have your calculator ready. You need to have somewhere to write so that I can give you information. You quickly punch, you give it back to me, then we go. We good? Okay, let's do that then. So here's the information. It says the company financial statements. The information relates to Ivory Park Limited for the financial year ended 29 February 2024. Here we go. Information A, balances, totals, among others that appeared in the books. And then here is more information. And here's the first question. Calculate the following. Depreciation on equipment. Depreciation on equipment. So we had to calculate depreciation on equipment. This one was a very funny calculation. If you are looking for depreciation is at 10% per annum on cost. If you're looking for this, you're not going to find it because it's not there. That's the typical way in which we normally calculate depreciation. But there's another way, and we did that in grade 11. So if we are told that no equipment was bought or sold, everything remained constant. No addition, no disposal. So the change in accumulated depreciation is as a result of the depreciation. Trick number 3 for the day. Accumulated depreciation at the beginning minus accumulated depreciation at the end is equal to depreciation for the year. Depreciation for the year. Okay? All right? Or you can swap it around and say accumulated depreciation at the end minus accumulated depreciation at the beginning gives you depreciation at the end. It still be okay. Okay, let's write it that way then. Let's bring the eraser. It's still fine. Let's change it to that. Let's change it to that. Accumulated depreciation at the end minus accumulated depreciation at the beginning. It will still give it the same thing. Okay, so we're going to say accumulated depreciation at the end. That's 472,500. You still with me? Beautiful. Minus accumulated depreciation at the beginning. That is 344,700. Let's come here and see. So it's going to be 472,500 minus 344,700. That is going to give me 127,800. So my depreciation becomes 127,800. That was my depreciation. A bit different. A bit different. We're living in modern times. Things need to change. So you mustn't remain stuck and think, okay, the examiner has to bring it this way. You must keep practicing and keep checking what is happening. What are the new ways that an examiner can bring? In this case, we looked at the difference between your accumulated depreciation at the end and the accumulated depreciation at the beginning, and it gave us depreciation. I remember in 1 year, when learners were asked to calculate the depreciation rate, you can be told depreciation is at cost, then calculate the rate. You should be able to do that. Okay? Let's go on to the next one, Mr. Simbi. And it reads, calculate the following. The cost price of the vehicles. Did we see something like this earlier on? Of course we did. We did see something like this earlier on. Okay, so here's the cost price of the vehicles, but now this is at the end. Okay, so if we have cost at the beginning, all right, so it is your cost at the beginning, which is how much? Let's see our cost at the beginning. 1,250,000, 1,250,000 cost at the beginning, and then let's see if there's any change. Old vehicles were traded in for a new vehicle costing. So this is the new vehicle. Okay, so we're gonna say cost at the beginning plus. Okay, but they say old vehicle was traded in. Okay, so we can say plus then minus is still okay. Plus new, which is addition. Plus the new, which is addition. So the new is 320 minus the disposal minus the disposal, the cost, which is 240 minus 240 will give you cost at the end. You're correct. I just opened a T account in this way. It's a ledger account. Come on. It's a ledger account. So you're going to come here and you're going to say 1,250,000 plus 320,000 minus 240,000 is equal to 1,330,000. Okay? All on to the next option there. I wanted to show you another one. I wanted to show you another one. You know, the extract of note number 3. You remember your note number 3, you always start with cost at the beginning. If this was note number 3, you would have said cost at the beginning, 1,250,000. Okay, and then you say plus addition, that is your new, and your new is what? 320,000. And then you say minus the disposal, but this is at cost. Then you subtract 240,000, and it should give you cost at the end, which is going to be 1,330,000. Someone says, Mr. Simbi, I've seen this before. Thank you. Thank you. Very familiar. This has been done before. Let's go to the next one. The next one says, calculate depreciation on vehicles. Okay, so if we're to calculate depreciation on vehicles, we know we have our son, sold, old, new. Sold, old, new. Let's start with the sold. We are told that depreciation is on the diminishing balance method. So we know that its cost is 240. So I'm going to come in, I'm going to say 240,000 minus accumulated depreciation of 73,600 minus 73.6. Calculators, please. That's going to give me, so it's going to be 240,000 minus 73.6. That's going to give me 166.4, 166,400. That is my carrying value. Remember, it's cost minus accumulated depreciation is equal to carrying value at the beginning. Then I take my carrying value at the beginning, which is 166,400. And then I multiply that by my depreciation rate of 20%. Then I need to know for how many months did I have it. The financial year ends in February, that means it begins in March. So I'm going to count from March, April, May, June, July, August. Do I count September? No, because it's 1 September times 6 over 12. If you punch that on your calculator, we're now going to say, how much is that? 166.4. 166.4 times 20% divided by 12 times 6. 16,640. 16,640. That is my depreciation. Okay, so my depreciation for the sold is 16,640. That is my first depreciation. Let's come to the old. With the old, depreciation on the old is 132,720. So it's given 132,720. That is on the old. It's given 132,720. Do we have a new? Yes. An old vehicle was traded in for a new. The new is 320. So the new is 320,000. Then I say 320,000 multiplied by the rate of 20% times how many months? Trade in. We brought in the new, we took out the old. So it's just going to be 6 months. All right. We just bring in the new and we take out the old. So that's how we get the 6 months. Okay. So it's going to be 320,000 multiplied by 20%. Why can't we just divide by 2 already? Okay, 32,000. 32,000. Oh, someone is saying, Mr. Simbi, why did you divide by 2? 6 over 12. 6 over 12. Okay. So we're going to add now our depreciation. So we're going to say the sold. Where is the adding machine? We're going to say the sold 16,640. Sold plus old 132,720. Old plus new 32,000. That is going to give us 181,360. That is going to give us 181,360. 181,360. That becomes our depreciation. 5 marks. That was easy. Okay, let's go on to the next one. Profit or loss on the vehicle. Very familiar. Okay, let's see if we can do this one. So we're going to come and we're going to say we want to calculate the profit or loss on the vehicle that was disposed. All right, and then we're going to come And then we're going to say here, we remember we want to ascertain either the profit or the loss. And the easiest way to do that is to come and say the cost is 240, which is your 240,000, and then you're going to subtract your accumulated, where you're going to take your 73.6, then you're going to come and you need to add the depreciation for the year. All right, and to get the depreciation for the year, remember we calculated it already. We calculated it. That is already here, and we got our amount of depreciation, which was 16,640. So plus 16,640 here, we close that bracket. Okay, so here is my cost minus my accumulated depreciation. It will give me my carrying value on the date of disposal, which is 153,660. And then I'll simply now say, here the saying, calculate the profit or loss on the asset disposed. The trade-in value was that. So it is your selling price, which is 153,660. Okay, I need to punch in calculators. I want to say, Mr. Simbi, you did not get the right figure there. Let's punch it in. Let's punch it in here. Okay, let's punch it in together. So it is 240,000. So we can add these two first. We can add those two first. Let's see if we can do that. That is, we say 73,600. Then we say plus 16,640. And it gives us 90,240. So here it's 90,240 here. So let's see the correct carrying value then. So we would then say 240,000 minus 90,240. That will give us 149,760. 149,760. And then you now say the selling price, which is 153,660 minus the carrying value, and the carrying value is 149,760. And then it will either give you profit or loss. In this case, we're coming and you're saying 153,660 minus 149,760, and that will give you 3.9, positive 3.9. Okay, so we've come to the end of today's lesson, and these are other internal controls that you need to relook at. The control over your tangible assets. These are the control that you need to look at again. That is the control over tangible assets. That is, purchase assets should be authorized by management. The internal auditor must ensure that proper records and documentation relating to fixed assets are in place. All fixed assets should be recorded in the fixed asset register. Then receipt invoices should be proof of purchase for insurance and external audit purposes. Fixed assets purchase must be labeled, that is barcoded, or serial number given for identification and asset verification. Regular stock taking of assets and comparing against the asset register, and signing in and out of assets to track where they are and also who used them. The movement of assets must be recorded in a logbook, that is for vehicles. All fixed assets must be insured against fire or theft. We have come to the end of today's lesson, but I'm gonna ask that we make a date, that we meet on the 29th of May to be a Thursday, because on the 30th of May, indeed it is happening. You're writing your paper one, your June paper one. So I want us to meet on Thursday at exactly 2:30. I'll be here to do paper one revision. I'm going to go through your statement of comprehensive income, your statement of financial position. I'm going to do adjustments. I'm going to touch the cash flow statement. I'm going to touch financial indicators, major shareholding, corporate governance. Will I be able to do all of that? Certainly not, but I'll touch on certain areas. So do make a date with me on Thursday, the 29th of May. I'll be here at exactly 2:30. Tell your friends to tell their friends that Mr. Simbi will be doing the last class before the June paper one. I hope to see you. Until then, enjoy your studies and goodbye.